Got that going. And let's see here. Make sure. All right, so let me go ahead and start the recording. And thank you guys for tuning in tonight to the presentation on budgeting. All right, so tonight we're talking about budgeting basics, essentially. Now, a few housekeeping items. First and foremost, I do appreciate you guys for joining tonight. Just a few housekeeping items just to make sure we're on the same page. We ask that if you are not speaking at the time being, that you mute yourself. That way there's no distractions, there's no background noise or anything like that. It's just one of the Zoom, we call it Zoom etiquette, just to make sure that there's no distractions. So another thing too is you can feel free to ask questions at any time. So today, for those that are joining for the first time, we're live on Zoom. Zoom is our main platform. We're here with the Chicago Urban League, and we're doing our entrepreneurship class. We're also streaming live on Facebook, and we're streaming live on Instagram on my page. And this is just something we like to do to keep things engaged, to keep the questions flowing and everything like that. If you have a question to ask, what we basically request is that if you're on a Zoom, you can unmute yourself at any time. If you're on Facebook, then you can simply type in your question. If you're on Instagram, you can also type in your question. And same thing with the Zoom, you can also type in your question as well. With that being said, today we'll be talking about budgeting. So how to budget for your money, for your business. One thing about my presentations is that anything we talk about can not only apply to your business, but it can also apply to your personal as well. So when we talk about budgeting, we're talking about business budgeting. We're talking about the income statement, the profit and loss statement. However, you can also apply it to your personal finances as well. For those that weren't with us last time, essentially what we talked about was accounting basics, right? We talked about the 4 financial statements, the profit and loss, the balance sheet, and then we talked about the cash flow statement and then the shareholders' equity statement. Really, there's only 2 statements that you really need to know really well. And that's the profit and loss and the balance sheet. And in reality, it's really the profit and loss. If you understand the profit and loss very well, then your business will do pretty good, right? I think if you understand your P&L, your profit and loss, and you are proactively going through it, you are proactively managing it correctly, then I think you have a higher chance of success for your business than anything. Right, so we talked about some of the basics of that. And this presentation will more so sort of back it up a bit. We'll go into the profit and loss in detail, talk about how to build a budget using a profit and loss. Then we also talked about really how to price your product or service. We talked about different techniques in order to price your product or service, right? Different reports, for example, the IBIS World report that you should be looking at in order to get a nice, solid, and accurate price for your product. So that's going to determine the price of your product is going to determine the revenue. Revenue is simply price times quantity. That's all it is. So number of customers times the price you charge them equals revenue. It's real simple. So we talked about that extensively. And really that's going to transition today into budgeting. So we talked about the 4 statements. We talked about how to determine your price. Now we're going to make sure that we talk about how to budget for stuff. For those who don't know me, my name is Jeff Badu. I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services. And that's the firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the U.S. And we also have clients in over 20 countries at the moment. Along with that, we run Badu Investments LLC, which is my real estate investment company. And right now we control 118 units, apartments, essentially on the south side of Chicago, and hopes to restore traditionally underserved communities, provide them with better housing, better tenant management, things of that nature. And then we have the Badu Foundation, where we provide financial literacy education to the youth and people experiencing homelessness who may reside or who may be in those communities. And last but not least, my purpose in life, which is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. For those who may have been driving, may have not necessarily heard that too well, let me just repeat it one more time. My purpose in life is to inspire and support the super hungry to take hold of infinite resources, right? Super hungry, those that are listening to this presentation today, to take hold of infinite resources, such as the information you're about to listen to, in order to create an abundant lifestyle. So with that, let's go into the presentation. And yes, infinite resources. When we talk about infinite resources, we're literally talking about the information you're about to receive today, right? How to develop a budget. That is part of infinite resources. Infinite resources is simply how do we take what you have or the information you're about to learn and actually turn it into something. So just something to keep that in mind. And with that, let's go into the agenda for today. Remember, you can ask a question at any time. Right now, we're hosting a class with the Chicago Urban League for those who are just tuning in. And we're talking about budgeting basics, which is, we had a class last time, or at least a video, that talked about the basics of financial statements, how to price your product or service. And now we're going to go deep into the profit and loss, or the budget, essentially. All right. So if you have a question, you can feel free to unmute yourself on the Zoom platform at any time. You can also type in your question. If you're on Facebook, Instagram, you can also type in your question into the chat. All right, so agenda for today, we're going to talk about the cost of key activities and resources, right? Infinite resources, I may call it. So we're going to talk about that because remember, last time what we ended off was pricing. How do you price your product or service to determine your revenue? Now we're going to talk more on the expenses side. And when we say expenses, we mean investments into your business to help you grow your business. That's the way I look at expenses, at least. Then we'll go into a budget introduction. Just give you some foundational knowledge, foundational resources around budgeting. Then we'll actually go ahead and look at a real budget, a live budget. So on the slides, you'll see a certain budget, but we'll actually do it a bit differently, just from some of the feedback that I've gotten in the past. And then, as usual, you can ask any questions at any time. All right, so understand the cost of key activities and resources. So in your budget, you have income, which is revenue, and then you have expenses. That leads into your net profit. That leads into the money that's left over for other things, we call it. Now, if you listen to the last presentation, you might have heard something that goes a little something like this. Business owners must be able to track the money. Let me repeat that. Business owners must be able to track the money. If you can't track the money, you don't have a business. You have what's called a hobby. Right? So you must be able to keep track of the money at all times. Right? So at all times. Now, one of the things about key activities is that they're really expenses, or I would replace the word expenses. So by the way, in our firm, or in my world, we think abundantly. We think abundance mindset. We don't look at things as a cost, right? We look at things as an investment. Now, yes, it does say cost at the top of the slide, but just think about it in terms of investments. We do have to be practical, but we also have to think outside the box a little bit. So expenses that help you grow your business. For example, marketing. When you spend money on marketing, you should be able to generate more dollars, more money. Supplies. When you buy certain supplies, it should help you grow your business. Then software, right? I'm a tax professional. I need tax software in order to help me do what it is that I do, help me do taxes. We need the tax software. Employees or contractors, right? People, human resources. We need to invest in our people so that we can all grow and make some money together. So these are all things you want to consider. Now, I'll give you an example. My firm, we still do, we use Yelp to market a lot. Yelp generates a lot of leads. And ultimately with Yelp, we can achieve, all right, so we got somebody, there we go. All right, so with Yelp, we can ultimately achieve, like back then, we were achieving about a 400% return on investment. 400%. And just to demonstrate, let me just show you something really quick. Now, excuse me for those that are on the Facebook and Instagram. You won't be able to see this stuff because this is a presentation for the Chicago Urban League. But it is good to listen to the information, at least jot down some notes. All I'm doing here is I'm basically just using, I'm basically just going to demonstrate an example, but I will read out the numbers and everything like that. So just bear with me on that. So pretty much what I'm going to do here is I'm actually going to pull out a sample budget template that we have available. We actually send this to our clients, by the way, those who may not have what's called a P&L, a profit and loss report. So let me go ahead and start the sharing on this. So in our firm, we market through Yelp. Right, so Yelp is one way that we get new customers or new clients. So let me just put, so Yelp marketing. Hopefully everybody can see this here. All right, so when I started, just to give you some backstory, I started my firm, Badu Tax Services, in 2016. On September 16, 2016, I turned in my 2-week notice at a firm called PricewaterhouseCoopers, or PwC. At the time was the #1 public accounting firm in the world, which I believe they still are. And I decided to turn in my 2-week notice in order to become a full-time entrepreneur. All right, and somebody's asking a question about the screen share. Yeah, this is not available for Instagram or Facebook because we're doing an exclusive event for the Chicago Urban League on Zoom. This is only for the Chicago Urban League. We're just streaming it live just so you're able to ask questions, just so you're able to chime in a bit. As far as the material and everything like that, it's strictly for the Zoom platform. So just a heads up on that. But I started the firm back in 2016, and one of the ways that I was able to get clients or customers was Yelp. I had heard some great things about Yelp, so I decided to try it out. As a matter of fact, it was somebody that reached out to me and said, "Hey, have you ever thought about doing Yelp ads?" I'm like, what can you tell me more? And, they told me a little bit about Yelp, how you can market. If you spend $100 a month, they'll give you, I believe at the time, it was like an extra $50 a month or so, something like that. Or actually, I think it was $300 in a year if you spend some money with them. And I said, cool, why not, right? I'm brand new, starting to build the business. I did have a few clients that I was working with over the years, complimentary actually. And then when I launched the business in 2016, I had to find ways to grow the business. I had just left my firm, PricewaterhouseCoopers, and so I needed something in order to, basically I needed to build the business, right? We all got to build our business. And in my case, I had to build my tax firm from the ground up, from scratch. So long story short, Yelp is a platform that allows you to advertise and spend money, and they have a thing what's called cost per click. So every time somebody clicks on your ad, you get charged for that. And you only get charged if somebody clicks on your ad. So with that, we were spending, so let me just demonstrate the numbers. So we call it monthly spent, let's just say. We were spending about $100 a month. And with $100 a month, it would generate roughly, give or take, you're looking at about 20 leads. Out of those 20 leads, about 5 of them become clients. So clients acquired. I just say 5, right? So 5 clients out of $100 a month Yelp ad. So I would say that Yelp it's a great platform. I love the platform. Yes, I do see somebody who mentioned they used to work at Yelp. And we still use the platform, by the way. We still advertise on Yelp. But I started off very, very small. I had no reviews, nothing like that. And so when I did good for a customer, I would ask them for a review because that's what I was taught to do, right? This is marketing 101. And so the more reviews you get, the more people, the more attractive your page becomes. So your clients acquired and your leads generated become more. But let's just say 5 leads. That's it. Just 5 leads. 5 clients. I'm spending $100 a month. I'm getting $300, by the way, for free. So we'll do some math on that. And by the way, what I'm looking to calculate here is my return on investment. That's it. Just ROI. Very, very simple number. ROI, let me put the formula in here, is simply how much you made, so return divided by investment. It's real simple. Right? It's real simple. Return, meaning how much did you profit, divided by investment. How much did you spend? So in my case, right, essentially I spent $100 in that month and I got 5 clients. On average, each client would pay me, so price per client, or I should say, let's do revenue per client. Revenue per client is about $150. We were charging $150 a tax return. Back then, we were just doing really just individual, simple 1040s. So revenue per client is $150. So when I go into my return on investment formula, I take the 5 clients acquired times the cost per client. Remember, what I showed you guys last time on the last video was that in order to get your revenue amount, it's simply price times quantity. So in this case, 5 clients times $150 equals $750. So that's how much total revenue. Now to get my return on investment, my investment was $100. Simple. My return is simply how much did I make, the revenue amount, minus the actual investment. So you have to subtract out the investment. Revenue minus expenses equals net profit. So if I do this, ROI is going to be return divided by investment. And you always multiply it by 100, by the way. Or in other words, let me make it simpler. Let's put it in percentages. 650% return on investment. Right, 650%. Now, would anybody invest in this? Anybody? If I told you that an investment out there can make you 650%, would you invest in it? You guys can unmute yourself, by the way. Okay, go ahead. Yeah, great question. So Yelp charges per click on the ad. So if I have $100 monthly spent, I can only get up to $100 in clicks. Exactly. Exactly. All right. So we got one that says yes, and we got somebody on Facebook. Michael says you'd be crazy not to. Absolutely. I mean, what stock in the world do you know right now can yield you 650% return? Now, knowing that, would you invest more into Yelp? Absolutely. That's exactly what we did. Is we started spending about $1,000 or so. We went super crazy one month. We did 5,000, which was going overboard, to be honest. It was so good that we're like, man. And I'm already an investor, so I'm already in the stock market. I'm a real estate investor, and so I already have an investment mindset. I'm like, holy cow! You tell me I can make 650% return on my money on one platform, on one marketing platform? I was like, you'd be a fool not to invest in it. 650, right? So now think about it. 650% return on your investment. That's huge. Now I'm missing something. Does anybody know, for a magical $100 bill, does anybody know what I'm missing? I'm missing something with this return on investment because it's not an accurate return on investment. There's something I'm not factoring in here. Yeah, great question, Lee. So for those who didn't understand the question, or for those who didn't hear the question, basically Lee is asking, should you factor in all your expenses in this return on investment? And not necessarily. That's a great question. Not necessarily, because each expense bucket, each investment, at least variable. So you have fixed costs and then you have variable costs. A fixed cost is something like rent. It will never change. Whether you made $1, $1 million, your rent is still the same, right? Variable means as the revenue goes up, right, or as you spend more, your revenue goes up in that. So not necessarily. I track ROI individually. So I track, hey, how much did this Facebook ad make me? Unfortunately, if I'm to factor in all these costs, it wouldn't give me a true ROI. Now you can factor in your profit margin. That's a different calculation. Profit margin is simply of every dollar you make, how much of that is profit, right? From a holistic standpoint. ROI is more tracking individually each and every investment, each and every cost. Now you can track ROI of the entire business, but from this standpoint, I'm actually talking about ROI from an individual key activity, essentially. Yeah, great question, Bernita. For those that didn't hear her, she said, basically, am I tracking each, with return on investment, in this case, cost of key activities? Yes, we're tracking it individually. We're tracking each and every cost. We're asking ourselves the question. We're looking at all our expenses. Okay, marketing, this specifically marketing. Did it make me money or did it not make me money? Yes or no? Checkbox. Right? I've had some ones that made me no money after 6 months. So guess what I did? Anybody want to take a guess? Yeah, you get rid of it because it didn't make you money in 6 months. I mean, for something to take 6 months and not make you any money, you got to get rid of it. I'm talking about not a single dollar in revenue. So for me, I do the 3-month rule actually. If it doesn't yield me return on investment in 3 months, I'm either going to get rid of it completely or I'm going to trim it down a bit. I give it 3 months. I give an investment 3 months to make me money. Right? So basically, the one thing that I'm leaving off here is that a tax preparation client doesn't just stay with the firm for 1 year. On average, they stay for 7 years. 7 years. So that means that I need to multiply this return number by 7. And now my return on investment is $4,550. I'm sorry, 450%, 550%. For every $1 I spent in Yelp, in other words, for every $1 I spent in Yelp, I make $45.50. Would anybody invest in that? Go ahead. Yeah, great question, Shannon. Shannon asked the question, how did I get charged per click? Well, that's Yelp algorithms. They determine that. So depending on the seasonality, for example, right now it's tax season, it's hot, so they're going to charge me more per click. But maybe when we're in our downtime, they're not going to charge me as much per click. So yeah, that's something Yelp does have control over. So yeah, but that's a great question. Now, somebody asked the question, cost of tax return. Yeah, cost of tax return is $150. In this case, very simple. This was back in 2016, by the way, when we first got started. So $150 a tax return. Then another question, you do Facebook and Instagram ads? Not really. Not really. I do it very, very small scale. I mean, we are about to start doing a lot more, right? So hint, hint, you will see some more Facebook and Instagram ads. So you can track those metrics the same exact way you're tracking it here. Except Facebook, it gets a little weird. I mean, for me, I found it harder to track like actual paying customers through Facebook ads. But there are ways to optimize it so you can easily track it. With Yelp is real simple. I spent X amount of dollars. It generated this amount of leads, meaning so-and-so, meaning 20 people sent me messages or they called me, and 5 of them paid me, right? It's real simple. Very, very easy to track. And it cost me $100 for that. Yes, you have things like rent. Yeah, you have things like software and all that. But we're not necessarily worried about that. We're talking about pure return on investment on this specific. Like, had you not spent this $100, would you have even gotten this $750 a month? You know, that's what I'm looking at with ROI. I'm not looking at, oh yeah, with rent. Yeah, you gotta have a place to do your business, no matter what. Yeah, you gotta have a laptop. Those are just sunk costs. Those are things you have to spend money on anyway. Yes, you can reduce some of those costs, but at the same time, you really have to, you gotta invest in your business, and there's certain things that you just have to. For example, a cell phone, right? You gotta have a cell phone to run your business. That's a sunk cost. That's not anything that's variable. That's a flat sunk cost. So basically, when you're analyzing your return on investment, these are some things that you want to consider in order to see whether or not you're making money from that. So for me, every 3 months, literally, you know, I look at my budget for the business. I have an annual budget and then I have a monthly budget. Can anybody guess how you get your monthly budget from your annual budget? Anybody? There you go. Renita, we got one. Yeah, there you go. You take the... Yeah, go ahead. Yeah, great question. So Bernita basically asks, where did I get my 7 years number from? It's reading the industry report via IBISWorld. It told me that the average person stays with their tax preparer or professional for 7 years. IBISWorld, that's the name of the industry report. IBIS, IBIS. Absolutely. Yeah, so when you read your industry reports, it's going to tell you certain things. Like, hey, this is how much we typically charge for X. These are the key players that are in your industry. By the way, 10 years ago, actually 11 years ago, back in 2010 was when I first read the tax preparation industry report. And it told me that the industry would eventually go virtual. In 2021, or even 2020, guess what happened? COVID hits, and the industry was forced to go virtual. A lot of accounting firms were forced to go virtual way before then. But in 2020, with COVID, if you weren't virtual, you got crushed. So the industry reports give you a hint as to certain things that are going to happen. When we started in 2016, we were actually virtual, about 80% virtual, 20% in person. Now we're 100% virtual, 0% in person. And that's just because of what we've read with the industry report. So you always got to follow the trends. Always understand, read your industry. Know the industry like the back of your hand. Know it better than anybody that's in your industry. If you do that, you'll make a lot of money and you'll make a lasting and long impact in many people's lives. So you got to understand your industry. So I got my 7 number from my industry report, but this number is actually even incorrect. Why? Because that client is not just going to do tax preparation with me. They're also going to do some tax planning. They might do some financial coaching. We run a company called Badu Enterprises. And back then, we only had tax preparation, tax planning, tax representation. We also did financial coaching. So out of these 5 clients, at least 2 of them are going to want to do a tax plan. And back then, we were pretty much lowballing the tax plans. We were doing them at about $500 a plan. Nowadays, we do plans as high as $10,000 a plan. So basically, 2 of these clients, so I'm not going to update it here, but at least 2 of these clients are going to do a tax plan that's going to add an additional $500 per. So 500 times 2 equals $1,000. So I can just add another 1,000 to my return on investment. Right? So you got to understand these things in your business. What are you spending money on? You can do the same thing for an employee. You got to know the one for the employee, especially, or the contractor. If I pay this person this amount, I love the contract business, by the way, because there's no payment if there's no production. So you can say, okay, if so-and-so produces X amount, how much of that is profit to the business? Or if in an employee standpoint, if I pay this person X, how many new clients are they going to generate? How much does each client pay me? And how much of that is going to go into my ROI, return on investment, for that specific employee? So this is why I recommend you do this, like that detailed on an individualized basis of each expense. I go drill down the list of my budget. Advertising through Facebook. Is it making me money or not? Yes or no? Oh, no? Gone. Right? Then you go into the next one. Maybe it can even be a loan, determining the interest rate. This loan that I got and I reinvested it into X. Is the interest that I'm paying more than what I'm returning from this specific money or from this specific investment? So it gets a little tricky. I would try to keep it as simplified as possible. Saying, okay, I spend this amount. It generates me this amount of leads or these amount of new clients. And this is how much I'm going to make from that investment. Every single item on your budget. And I'll go through some examples in a second. But any questions so far before we go more into the topic? All right. So the goal, as you can tell by me analyzing that Yelp number so brutally, the goal is to turn these costs or investments into revenue. If it doesn't make dollars, it doesn't make any sense, right? So don't invest money into something that doesn't make you any money. And I'm talking about from a business standpoint. I'm not talking about philanthropy, nonprofit, or anything. I'm talking about from your business. If it's not making you dollars, it doesn't make any sense. Right? So always understand what you're investing into. Understand what you're investing into. This book right here is an investment. It's an investment. It's something that's going to generate me more revenue as I'm reading the book. So I look at this as something that's going to turn into revenue. And just look at it. Laptop, right? So if you bought that laptop, now a laptop is indeed a sunk cost, because it's like, okay, I pay for the laptop and it's going to make me money. However, what about more laptops? Do you need more laptops? Do you need better laptops? You know, do you need a better phone? Do you need an Apple Watch? Whatever it is, something that helps you generate more money, you should be putting more money into it, because it's going to return, right? So that abundance mindset, forget about looking at the cost for a second. Look at how much it can make you first. Look at the value it's going to drive to your business. And then see, okay, this is the value, this is the cost. Is the value greater than the cost? If yes, you should keep it. It's real simple. And now within your pricing, you can also incorporate the cost into your price. So if it costs you, real simple example is the t-shirt example. If it costs $2 to make a t-shirt, and your industry says that your profit margin is 60%, that means that you should be selling that t-shirt at no less than $5. No less than $5. Let's do the math real quick. Let's do the math. So profit margin, by the way, is for every dollar you make, how much of that is profit? Simple. So if your profit margin is saying 60% of your industry, which is pretty high, by the way, it means for every dollar, 60% of that should be profit. So if I take basically, let's do this. 2 divided by 5 equals 40%. So that's the cost. Well, the opposite of that is essentially the revenue. I need to sell it for $5. 5 minus 2 equals 3. 3 divided by 5 equals 60. 60%. So it's reverse algebra, basically. Now, don't ever look to cut costs in areas that grow your business. Like, basically, if Yelp is generating me 650% return on investment, why in the world would I get rid of Yelp? It makes absolutely no sense. Now, there is a peak point, right? There is a point of diminishing returns where if you put too much into it, then you start diminishing your returns a bit. So, for example, the reason why we decided not to spend $5,000 on Yelp, was because we found out that Yelp also has organic leads, organic traffic. People coming to your page directly just from an organic search. So with that being said, had we put 5,000 into it, then we might not get as many organic leads. So we'd be losing money at that point. We'd still be making money because the return on investment is still there, but it goes lower because there's not as much organic. Everybody's just seeing the ad and you're just clicking it, as opposed to you just searching and finding the page organically without an actual ad. So with that being said, you always have to watch out for that. But I would say look at what your industry is returning. Look at the average return on investment on certain investments. Anything higher than that, I don't see anything wrong with investing into it. For example, in real estate, when we do deals, we like to see a cash-on-cash return of 20% or greater. So if we find a deal that's going to make us 20% or greater, we're going to buy the deal. If it makes, if we can find a down payment, usually we can find a down payment. If we can get our money right, if we have capacity to take on the deal, then we'll do it. So always keep track of your return on investment, ROI. It is the number one most important thing for any investor to look into, especially if you're looking to sell your business, get equity, whatever it is. Even to the banks want to see that you have some nice return on investment. And the opposite, right? Eliminate costs that don't generate return on investment. And sometimes it's certain people, believe it or not, it's certain people around you. Sometimes you have to eliminate that, disassociate yourself with them because they're actually costing you from doing business. And that's a real statement. I'm not talking about just employees, by the way. I'm talking family. I'm talking friends. I'm talking whoever is diminishing your ability to make return in your business. You know, so if somebody's hindering your progress in your business, you gotta just slowly let go. Say, hey, I love you and all, but I'm sorry. We just can't. You know, I need some space. Yes, sir. Yes, sir. Yes, sir. Appreciate it, Jeremy. Yeah, he basically just said that sometimes, yeah, he's going through something with the business right now, and you've got to cut certain people at certain points. We actually went through that this year with somebody that was within the company. And as far as family goes, yeah, you just got to keep a distance. You don't even have to say, hey, we can't talk ever again. Just keep a distance. Say, hey, I'm focused. I'm on a project right now. I'll be gone for about a month or two, you know. And sometimes you just gotta do it. All right. Yeah, absolutely. We got somebody on Instagram, and they said they'll be signing up for Yelp. There you go. Get your Yelp discount. Absolutely. And try to leverage resources that can minimize costs in certain areas. For example, an employee or a contractor that can do two things at the same time, right? They can do marketing. They can also do sales. They're in a dual role. And yes, marketing and sales are two different things. Well, combine that together for them specifically because they're good at both. That way you don't have to hire a completely new salesperson, reinvent the wheel. Never reinvent the wheel, by the way. Just take the wheel and just roll with it. Take the wheel, just roll with it. Right? Whatever you got to do. Make sure you get a mentor, by the way, a coach, a business coach, somebody who's done it before you, bigger and better. They'll teach you so much, and they'll help you avoid so many mistakes. All right, so with that, understanding the cost side of things, we talked about the revenue side of things last time. That one is easier to understand, except for how to get your price. The price thing is pretty complicated. Yeah, go ahead. Right now we're at $500 a month on Yelp. Absolutely. No problem. Yeah, we're at $500 a month because we found more organic ways to get leads. For example, through webinars, through, you know, basically there's more organic ways, right? Organic means you don't have to pay to get the lead, basically, by the way. So referrals, word of mouth referrals, you know, that sort of thing. And yeah, I mean, with all the workshops we do at least 3 workshops a week now. So that usually generates leads. We have a newsletter of about 5,000 people. That generates leads as well. So anything that's organic, we're looking to take more advantage of. I mean, nothing wrong with Yelp. And another reason why we lowered our ad spend on Yelp was to get more organic traffic to the Yelp page. Our Yelp consultant told us, hey, you know, you got good reviews on Yelp. You're getting good traffic. Spending more money on there might just cost you a bit more because of the fact that they're now clicking your ad instead of just going straight to the page because they're genuinely attracted to the page. You know, and then we did some keyword searching, SEO, search engine optimization, all that good stuff. So there's different ways to market your business. There's so many different ways. I'm not a marketing expert, by the way, but I know a thing or two about marketing, running the business for about 5 years now. So with that, somebody asked, am I available for mentorship? Instead of me being available for mentorship, I have a website called jeffbadu.com where I offer resources such as books like these, Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. It is a book about my purpose in life and the 12 steps to creating an abundant lifestyle. So instead of me directly mentoring somebody one-on-one, I provide them resources and I say, hey, read through the resources first, let me know what you think, and then we can talk through any sort of mentorship opportunities that may become available at a later time. So definitely appreciate the question on that. And with that, let's talk about budgeting. This is very serious. 9 out of 10 small businesses go out of business within the first 5 years. And then another 9 out of those 10 go out of business in the next 5 years. Basically, you're talking about 1 out of 100 or so businesses survive. Literally, one business survives out of 100 in 10 years. It's a cold world out there. It's a dog-eat-dog world in the entrepreneurship world, especially with COVID-19. COVID-19 wiped out so many businesses, and the number one reason was because of stagnant business models, not paying attention to the industry report, not following the trends of what's happening with the technology, right? Being stuck in certain ways. So you've got to read the industry report. You have to read the industry report. You got to know your industry like the back of your hand, understand the trends. And my advice is invest into technology. Even if it's not the actual technology itself, invest into your education about technology. Because technology will dominate everything we do, and it's already dominating everything we do, but it's going to dominate it even more. Right? So in the future, we won't be doing things via Zoom. Everybody's just going to pop out, right? It's going to be like a big 5D, 4D, whatever it is, and we're going to be meeting that way. When I do a workshop, it's going to be a hologram, basically, that I'm talking to instead of a computer. You know, this will happen. Cars will be flying up in the air, right? There's so much stuff. People will be living in space. It's crazy. Why did Jeff Bezos resign, basically, from Amazon? Because he's in space right now. He's going to space. He believes that Earth has basically... not necessarily finite resources. Earth still has infinite resources, but he believes there's even more infinite resources in space, right? So he's out investing in space. Same with Elon Musk. If 2 of the wealthiest people on the planet are investing in space, what do you think we'll be in 10 years? We'll be in space, right? So you got to follow the trends. You got to follow the money. You're talking, they said astronauts are launching to space using SpaceX, which is Elon Musk's company. I mean, just imagine that. So always follow the trends. Understand that. Another thing you want to really understand is your finances too. Understand the budget side of things. So as a business, you want to have 2 budgets each year. You want to have your annual budget, which is a breakout of the year. And if you're an existing business, just look at each line item. Maybe you grow at 2x, 2 times each year. So multiply your revenue by 2. And your expenses, maybe your expenses go up by 1.5x. So multiply your expenses by 1.5. If it's a fixed cost, something that stays flat no matter what, keep it the same. No need to increase that. If it's a variable cost, something that increases with the trend of your revenue, then do a quick analysis, do a quick report to see what's the growth rate of that expense in order to yield the revenue that it needs to. So you need to have an annual budget, and then you take your annual budget divided by 12, and that's your monthly budget. A budget will help you stay on track. It will help you stay on track. Always compare your budget to your actual results, because numbers mean nothing unless you compare it to something. That's one thing I've learned. Numbers mean absolutely nothing until you compare it to something. Like you can say, I made $1 million in revenue this year. Like, okay, what did you make last year? What is your industry doing? What are you projected to make next year? Numbers mean nothing unless you compare it to something else. So with that, always compare it to your actual results. Make sure you have something like QuickBooks set up. If you don't have QuickBooks, we'll go through that next time, by the way. If you don't have QuickBooks, you've got a problem. QuickBooks can help automate your tracking for you. So always analyze, how much did I budget and how much did I actually achieve? If your revenue comes in lower than what you budgeted, that means you got to do some more. You got to sell more. You got to market more. You need to raise your prices maybe. You need to hire more people. This is why it's important to understand the cost of your key activities so that you can make the right investments. If expenses are too high and your revenue is not speaking the same, remember, if it doesn't make any dollars, it doesn't make any sense, maybe you need to cut some of those expenses. I had to cut some marketing platforms or marketing things because it didn't make sense. If it don't make dollars, it don't make sense. So you've always got to understand these things, because if you don't, it's ultimately going to be a problem for your business. Now, you can have multiple budgets for different components, right? You can have multiple budgets for multiple segments, multiple services. If you want, you can have your general operating budget, and then maybe you have your individualized budget. For example, in the Badu Enterprises, we have a budget for each company, right? There's 12 companies in the Badu Enterprises, so we have a budget. We sit down, we come up with our budget for the following year in the previous year. So around Q4 is when we come up with our budget for the first quarter of the following year. And that allows us to see, hey, what's going on, right? I mean, you've got to take this stuff seriously. And when you check out this book, by the way, which is available on Amazon, it's called Infinite Expansion: How to Infinitely Expand Your Vision of Abundance. It's going to teach you how to do things like set your vision board. Within your vision board is probably going to be your revenue number that you want to make in your business. So it's going to allow you to see it, really hone it in, really just soak it in, see it. And when you see something, you tend to believe it. When you believe something, you tend to achieve it even more. Your budget should be a part of your business plan. So business plans typically have at least a 3-year budget. So you have your 2022 budget, 2023, 2024. We usually don't recommend going out any more than 3 years because it's hard to predict stuff 5 years in the future, or more than 3 years. 3 years is a reasonable time frame to say, okay, you know what? I'm going to do these things. I think this is how much money I'm going to make. By the way, a budget is nothing more than, your best guess of numbers. Your best guess, essentially. The key is to consistently update your budget based on different factors. Maybe you're in the tax preparation industry, so most of your tax prep revenue comes during tax season. So you need to analyze your budget so that it can factor in the seasonality effect. I wouldn't expect your revenue for March to be the same as November, for example. Right? So just understand the seasonality of your business, understand the different factors. By the way, the name of the book is called Infinite Expansion, right? It's right here, Infinite Expansion: How to Infinitely Expand Your Vision of Abundance. It's available on Amazon. You can also feel free to check out my website, jeffbadu.com, in order to get more information. There's more books on that website as well, by the way. I've written 3 books before. So consistently update it. Now, with that, developing a budget, there's really 3 components of a budget. There's revenue, which is money, right? Money that you're making. Maybe there's product revenue, investment income, and then there's also expenses. So expenses include things like rent, utilities, salaries, insurance. You have fixed expenses, which is expenses that don't change. Like, they basically don't change as you make more revenue. So rent, for example, rent doesn't change just because you make more money. And then you have variable expenses. Variable expenses include advertising. Right? The more you spend on advertising, hopefully the more money you're going to make. That's how we build a business, is we advertise, we market it, we promote it, we hire people. Right? That's how we grew as a business. That's how any business grows as a business. And a revenue minus expenses equals net income or net profit. So with that, before we get into questions, let's go through an example of a sample budget or a sample net income or profit and loss statement. So as you can see here, this is what we have this available to all of our clients, by the way. Just in case they're not using QuickBooks or they don't have a profit and loss. P&L is a short for profit and loss, by the way. So At the top, we always have our revenue, which is sales. Basically, sales and revenue are used interchangeably. Then we have our total income. Now, if you are a retail company, I would expect to see cost of goods sold, which means how much, like when you sold something, how much did it cost you to make it? Accountants are very, very simple human beings, by the way. They're not looking to trick anybody. Cost of goods sold. What was the cost of the good that you sold? It's real simple. Just think about it. You always have to think about these things, theoretically, basically. So income minus cost of goods sold equals gross profit. And then gross profit minus your expenses. Expenses include advertising and marketing. We just talked about Yelp. Bank charges and fees. Commission and fees. Contract labor. So if you're hiring 1099 folks. Car and truck, gas, repairs, maintenance, right? Anything that you're spending on your car. Insurance, not including health insurance. That's another line item. And then interest you're paying on your loans. Health insurance, that's another big one. Big tax deduction for business owners. Job supplies, legal and professional, what you pay me as an accountant, that goes in that. Meals, whenever you're eating out or you're discussing business, right? Groceries, whatever it is, that's a tax deduction, so you want to include that. By the way, these are not just tax deductions. I just use the words tax deductions because that's the easiest way for me to explain it. Office expenses, that's another one. Rent and lease, that's another one. Repairs and maintenance. Salaries and wages, so W-2 wages you pay to people. Employees, actual employees. Supplies, taxes and licenses. Travel, that's a big one. The infamous other business expenses. That's going to get you your total expenses. This is not an all-inclusive list, as you can tell by the title of the document. And then income minus expenses equals net income. Like income minus expenses equals net income. So you want to drill down all these line items. And for me, I analyze my budget now on a monthly basis. I used to do it every 3 months. Now it's monthly. I go down a list, advertising and marketing, right? I compare it to the budget. I compare the actuals to the budget. And I see, hey, is this something that's making me money? Yes or no? And sometimes I need to really drill down on that specific advertising line item to see Facebook, Instagram. To be honest, we cut off some of our Facebook ads because they weren't generating results. Maybe we didn't optimize it correctly. So it wasn't giving us the results that we got with Yelp, at least. So we're like, well, why not just put more money into Yelp? If we're going to put more money into Facebook, why not just take that same dollars that we know is going to make us money and put it into Yelp? All right, so with that, we got about 20 more minutes or so to go, and then we'll wrap it for the day. Any questions so far? Any questions at all? Absolutely, Benita. Mm-hmm. Not necessarily. We just want to break it out. This is just for tax purposes, by the way. Insurance just means general liability insurance. Let's see what other insurance you have. Equipment insurance. So we just want to break it out. It's just a tax. Exactly. Mm-hmm. Correct, but not owner's draws. Owner's draws are different than owner's W-2. Owner's draws is like distributions. You're sending yourself money, a check through Zelle, QuickPay. Yeah, distributing profits, exactly. And that would go on a balance sheet, by the way, no problem. Absolutely. Any other questions? Yeah, hey Lee, great question. Lee asks, is there a more cost-effective way to get access to the IBIS World reports because they're pretty, and I wouldn't say expensive, they just require more of an investment. right? So in our firm, one thing we teach is changing the language, changing the verbiage. So yes, did you get a chance to watch the last video that we did? Yeah, yes sir, yes sir. Absolutely. So yeah, we actually do give out complimentary IBIS World reports if you shoot me an email. Just let me know your industry. Let me know that you attended today. That's same for Facebook, Instagram. Let me know you attended today, and I'll be sure to get you an IBIS World report if it's available in the IBIS World system. So yeah, just shoot me an email, and I can send you a complimentary IBIS World report. Yes, sir. Yeah, IBIS World reports are pretty expensive, but understand this is an investment in your business. You know, I mean, we've spent quite a bit of money on certain things. Quite a bit of money. Coaching. The number one thing that we pay people for right now is, contract labor and things of that nature. But the second biggest line item is training and education. Education is a big investment. Big investment. Right? So you've got to invest in your business at all times. It's one thing that I see business owners not necessarily doing enough. And I know money can be tight at times. But hey, maybe you need to go out and get that loan. As an entrepreneur, especially starting out, you may need to, bootstrap a bit. You may need to sacrifice not being able to go to a fancy dinner one night. That's just what it takes as an entrepreneur. You just got to be strong. You've got to grind. When I started out, I have so many crazy stories. So many crazy stories. To the point where it just brought me back a memory. Where back in the day when I first started as an entrepreneur, I went on a date. Next thing you know, my card got declined. And I'm like, whoa, man, this is real. It's real as an entrepreneur. So you've always got to invest in your business. The money will come. Money must come no matter what. You've just got to really understand your business and you have to invest into it. By the way, the best investment on the planet is in yourself. Invest in yourself first and also invest in your business. Read books. I just showed you guys one. Read books. Rich Dad, Poor Dad is another book that I have that I recommend. And by the way, I'm more of an audiobook guy. This book right here is the beginner. This was pretty much the first financial literacy book I've ever read, Rich Dad, Poor Dad. And it truly changed everything. Everything. Mindset shift completely. I wrote Infinite Expansion, How to Infinitely Expand Your Vision of Abundance, which is more of a mindset book. But Rich Dad, Poor Dad is also a mindset book. It specializes more in the finance area. My book is more vision board, mindset, expansion, that sort of thing. Absolutely. Any other question before we move to the next slide? Mm-hmm. Mm-hmm. Yes, sir. Absolutely. Yeah, for sure. For sure. Appreciate for the sentiments, Jeremy. And yeah, so for those that didn't hear, he basically mentioned that you've got to change your words a bit. So instead of looking at something like a cost, you have to look at it as an investment. Because words are powerful. Words determine your future. What you say tends to be what happens. What you say, you speak things into existence. So when you say, man, I'm going to invest in myself, I'm going to invest in my business, Yes, it might cost me a few dollars, but it will make sense because it's going to help me generate return on investment in my business. And yes, I've spent money on things that cost me money, that lost me money. But guess what? I didn't lose, I won because I learned from the experience. I learned from it. You know, I'm somebody that almost went bankrupt. A lot of people don't know that. Back in 2017 and also 2018, some real estate flips. Got involved in the wrong flips with the wrong people. And ultimately almost cost me my entire business, my entire finances, everything. You know, so you've always got to invest in yourself. You do have to be careful in what you invest in. Always invest in the education first. Invest in the education first because that's what's going to allow you to know whether or not it's a good investment. It's not going to be 100%, but you will have a better chance of that because you'll have a better chance of success because you ultimately know whether or not it's a good investment because you've invested in the education of that investment. So with that, let's just go through a few things. So tools you want to utilize to develop your budget. QuickBooks. If you don't have QuickBooks, you should. Yes, it costs money. But also, yes, it's going to help you understand your finances better. It is going to automate your business and your finances. With QuickBooks, you're simply linking a business bank account or business credit card, and it's pulling the transactions so that you can categorize the transactions in QuickBooks, right? So you're literally linking a bank account, a credit card account, and then you're categorizing the transactions. You're going in there once a month or once a week, preferably, and you're looking at your P&L, your profit and loss. You're seeing how you're performing each month in your business or each week. And then you can make decisions strategically. How can you make decisions about the finances of your business if you don't even know the financial state of your business? You can't. That's the answer to that. You can't. Why do 9 out of 10 small businesses fail? Because they do not understand their business, especially when it comes to the finances. They just run it like a hobby. They're always on the go, but never seem to go to QuickBooks to analyze their finances. And next time we'll talk a little bit about QuickBooks. We'll give you, we'll give you a quick 10-minute tutorial / things to know about QuickBooks. In our firm, we do offer a full-blown 1-hour QuickBooks training, that you can feel free to take advantage of. But ultimately, in QuickBooks, you can create a budget. When you're starting out, some people start off with Excel because they don't have like any numbers. They don't have like a business bank account yet or anything like that, which is okay, right? You got to start somewhere. But eventually, as you start running your business, you do want to use something like QuickBooks. And yeah, it's a very, very great software to utilize. It can get you more tax write-offs at a minimum. It can get you more opportunities. And when you show that to an investor or a lender, man, they get so impressed with you. They're like, wow, this person knows what they're doing. I trust this person with money. I trust them with money. I use QuickBooks personally. And I'm actually certified in QuickBooks as well. So with that being said, and by the way, anytime I preach something, I'm usually practicing it as well. So I usually don't practice, or I usually don't preach something that I'm not practicing. So with that being said, we've got about 10 more minutes to go. Is there any questions? Any questions for me at this time? I greatly appreciate you all for joining our Facebook, Instagram, also our Chicago Urban League class via Zoom. Any questions for me at all at this time? We got about 10 more minutes to go. Absolutely. Yeah. Mm-hmm. Right. Mm-hmm. For sure. Absolutely. Appreciate it, Bernina. Yeah, I mean, she pretty much, for those that didn't hear her, she pretty much just said that she appreciates the fact that I've shared the tragedies that I've been through, you know, as far as almost going bankrupt. Not too long ago, by the way. Not too long ago. So because some people, when they speak, they just share the good stuff. So now you're thinking, oh, it's all peaches and cream. It's all la la land in the entrepreneurship world. It's absolutely not. There's more good days than bad days as an entrepreneur. However, you should always embrace the good days. Embrace the good days. Also embrace the bad days as well, because they're an opportunity to learn. For example, I've been sued before. I've been sued for my own assistant, saying that I quote unquote stole my assistant from the company that she was working with. I'm like, how is that possible? How can you steal somebody? You know, I got sued, got sent an invoice for about $15,000. And I'm like, wait a second, who's paying that? You know, but I overcame that. It threw off my entire day. Like literally, I was in a meeting thinking about that. I'm like, man, like these people are trying to sue me, this and that. You know, the average person is going to fall for that though. They're gonna be like, oh yeah, I'll just pay you. That fear of, man, what happens? And for me, it's about staying positive, having a good mind, and just understanding that this is just a touch from God, if anything. And I will get through it, and yes, I got through it. They ended up withdrawing the lawsuit. I got to keep my assistant, and life is good after that. Right? Another example. I currently run a car rental business that we're in the process of dissolving, where somebody hit a pedestrian. And of course, the pedestrian decides to sue me. Little did they know, the car was in a limited liability company. Long story short, they didn't win anything. Instead, the insurance company just paid them out. Had it been in my personal name, though, they might have gotten something from me. All right, so always protect your assets, by the way. Always. Always, always, always. Because if you don't, then you might get sued, especially as you're accumulating wealth, as you're accumulating stuff. Nowadays, we don't buy real estate unless we have something called a land trust around it. We don't even touch a property unless we can put it in a land trust. We don't do anything that doesn't involve LLCs or INCs. We don't even touch it because it's just not worth it. I mean, you can start a business that made $10 and somebody can sue you and take everything you have. It's just not worth it. Always protect. Yeah, great question, Benina. So the land trust protects the property itself. So with real estate, when you own it, some people own it in just an LLC, which is okay. The LLC protects your personal assets, meaning if somebody sues you, first of all, they have to sue the LLC first so that they can try to claim what the LLC owns, which is the property. They can't claim what you own personally. However, when it's in a land trust, they cannot take the property because you cannot sue a land trust, at least in states like the state of Illinois. You cannot attach a judgment to a land trust. So when a tenant sues, they get nothing. Right? That's what you call O.J. Simpson bulletproof asset protection. Yeah, land trust is only for real estate, first and foremost. It's basically something, it's a legal, let's call it a legal entity that you set up by an attorney. And essentially, the land trust is what owns the property. The actual owner of the property is the land trust, that legal entity. If somebody were to look up, absolutely, if somebody were to look up the owner of the property, it would show up as Chicago Title Land Trust number 1, 2, 3, 4, 5, 6, 7, 8. It wouldn't show up as, Badu Investments, for example, or God forbid, Jeff Badu. So it would show up as Chicago Title Land Trust number 1, 2, 3, 4, 5, 6, 7, 8. That is the owner of the property. It is not tied to my name, not even tied to my LLC's name. It's a land trust. Sometimes not even a bank can take back the property because of the land trust. And that's why some banks don't like land trusts. All right. Yeah, great question, Ms. Tina. And I promise we'll talk about it next time. But basically, so Ms. Tina asked the question, how do you establish business credit basically without getting into too much debt, like in a way, personally? And so you start off with business credit cards. You apply for a business credit card. And when you apply for a business credit card, you use your personal credit just to qualify for it. But as the card builds up a limit or a balance, it does not go on your personal credit score. The only thing that goes on your personal credit score is the inquiry. So basically, you want to start off with business credit as opposed to business credit cards as opposed to personal credit cards when you're growing and establishing your business. And yes, you can do this even if the business is 1 day old. For example, there's a Chase Inc. that you need a 700 or so credit score to get. And if you don't have it, use other people's credit. I've had to do that before. At least when I got started, right? Use other people's credit. And yeah, that's how you get business credit. And then as you're paying off the card, please be responsible with it. It's very important. Pay off the card, swipe, pay it off, swipe, pay it off, swipe, pay it off. Eventually, you'll get lines of credit, term loans. You'll get a lot of stuff, basically. You just want to have a good, solid business credit foundation and a business credit history. All right, we got time for one more question. Yes, we'll talk about business credit extensively next Monday. Yeah, no problem. We got time for one more question, and then we'll wrap it up for the day. It's 7:30 or so in Chicago right now. It's been a long day. So with that being said, would definitely love to answer one more question, and then we'll wrap it up from there. I did leave my email in the chat, and also the contact number if you want to contact. Yeah, great question. So, the question was how to use other people's credit. I mean, so this is the part of abundance, right? With abundance mentality, you have to do whatever it takes to grow your business. So, for example, right, if you have a family member, and this is my case, by the way, if you have a family member you can reach out to and say, hey, here's my business, here's my plan. I know you love me. I know you want the best for me. Hopefully they do, at least. But basically, you give them equity in your company. Hey, I'll give you 10% equity in exchange for getting $50,000 in credit. It will not go on your personal credit report. Only inquiries, right? We're getting these amount of business credit cards. You get to keep 10% of my company. You got to start somewhere. You get to keep 10% of my company in exchange for applying for $50,000 worth of business credit cards. Sounds like a fair exchange? Cool. Here's an agreement to sign. Yeah. It's in the business's name. Yeah, the credit cards are in the business's name and you have access to it. They have access to it too, but you can put in a contract like, hey, this is just, it's a paper agreement. I understand you don't know much about this industry. Please allow me to run the business. I'll cut you 10% of the profit. And oh, by the way, there's a buyout agreement. I can buy you out for X amount of dollars in the future. Right? That way you can cut them out the business eventually, in a nice way, of course. Yeah, so you got to really button up the legal documents. Yes, you can add people to companies. I mean, this happens all the time. Acquisitions, mergers and acquisitions. And then you use their credit to apply for the business credit. All right. Yes, we will talk more about that next time. I greatly appreciate you guys for joining. I hope you gained some very valuable information. If you need anything from me, please feel free to reach out to me. My website is jeffbadu.com, JEFFBADU.com. Let me just go ahead and leave that in the chat. And also, email is jb@badutaxservices.com. Once again, jb@badutaxservices.com. Phone line is 773-819-5675, 773-819-5675. With that being said, I do want to thank you guys for joining us tonight. We'll be back same place, same time next week, Monday, 6 to about 7:30. We'll be talking about business credit. We'll be talking about tracking profits and how to make sure you collect money no matter where you go. With that, I do want to thank you guys, and I pray that you have a great rest of the evening. See you guys. Absolutely, absolutely.